Good morning and welcome to Stock Market Today for Tuesday, June 11th, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas for you to consider in your inbox every trading day before the market opens. So let's get right after it now. U.S. equities closed higher, but off their best levels in Monday's trading. Tech, consumer discretionary, and financials were the best performers on the day. Defensives and comm services underperformed. Treasuries were weaker across the curve. The dollar was stronger on the major crosses. Gold finished down 1.2% after 8 consecutive gains. And remember, we looked at that chart yesterday and said we were not chasing. WTI crude settled down 1.4%. So your outperformers, discretionary, tech, and fins. Underperformers, utilities, REITs, comm services, and comm staples. As we get to the desk this morning, futures are adding on, up 50 basis points on the heels of a 5-day rally for the S&P 500. Asian equities were higher overnight, with China up 2.5%. European markets are higher as well. Treasuries are weaker across the curve. The dollar stronger versus the yen, but weaker on the euro cross to start the day. Gold is down 30 basis points. WTI crude is up 90 basis points. So for the S&P 500, as we said, moves higher for a 5th consecutive day. 1, 2, 3, 4, 5 days in a row. Support is in the 2800 to 2850 zone. Resistance is in the area of 2900 to 2950. We're closely watching this RSI for a shift to bullish ranges. So far, so good. We're moving in the right direction. Want to see it continue to shift higher. Chaikin money flow, on the other hand, continues to oscillate between barely positive and barely negative, now back in the barely negative or a bearish zone. So we'll continue to watch markets here, and with a focus on the leading parts of the market for long ideas. Look for bullish and very bullish names in leading sectors. That is the process. So your market in a minute now. What am I writing about in my note to Chaikin Analytics clients today? Well, it's Tuesday, so it's sector rotation day. We look at the trends across the major sectors of the market. The S&P 500, as we said, higher for a 5th consecutive day. Defensive sectors continue with bullish trends. Now, we've seen a little bit of a pullback, some counter trend reversals in the utilities and the real estate, but from a bigger picture perspective, the trends do remain bullish. But what's also encouraging, cyclicals are showing signs of improvement. Tech, materials, just to name a few, and we'll look at those a little bit later in the show. Retail continues to be a group to avoid, and as I said, futures do point to a higher open today. Let's dig into the power bars here for the major indices. Dow up 30 basis points. Power bar stays at 7 bulls to 5 bears. S&P 500 power bar here continues to improve. 121 bullish or very bullish stocks, 73 bearish or very bearish stocks after the S&P 500 added 44 basis points yesterday. NASDAQ, big outperformer on the day, up 1.17%, 26 bulls to 11 bears. So back to greater than 2-to-1 bulls to bears. Technology really leading the charge there. Small caps actually outperformed on the day. 433 bulls, 379 bears. Bonds succumbing to some profit taking. Prices lower, yields higher. Wouldn't be surprised to see that continue in the near term. Technology, as we said, was a leader, up 1% yesterday. 25 bullish or very bullish stocks, 9 bearish or very bearish stocks. And we'll take a look at the relative performance of tech in just a little bit. According to the Chaikin Power Bar, small cap stocks and large cap stocks have turned somewhat bullish. Major markets are mixed. Our stock of the day today comes from a group that we've been highlighting. M&I Homes, from the construction building services industry group. Now, it did close at 28.51, down 63 basis points yesterday, but ticker symbol MMHO has a very bullish Chaikin power gauge rating due to very attractive financial metrics, very strong earnings performance, and positive expert activity. 20 factors, 5 in each of these 4 categories, when combined, give us this very bullish rating. Very bullish stock, strong trend, strong industry group. We're fishing in the right pond, as I like to say. Taking our analysis a step further, market and model seem to be in agreement here. Been bullish since January, been outperforming since January, and continue to outperform. Now, I'd love to see the intensity of that outperformance start to pick up. Stock is closer to overbought than it is to oversold. Money flow has remained bullish for the most part since the beginning of the year. Slight dip here, but for the most part, consistently bullish. Stock is above the rising long-term trend line. And what's interesting is last 4 quarters, earnings have surprised to the upside. Now we're in a bit of a consolidation here, closer to overbought than to oversold. So, more aggressive traders, I think you can take the opportunity here. If you're more conservative, I think you want to see sideways action in the 27 to 29 range, produce an oversold reading before getting really excited on the long side of the portfolio. There's no one way to trade. You have to understand your style and what fits with your strategy. But regardless, MHO, MI Homes, is a name to consider on the bullish side of the portfolio based on the process. Looking at the sector tracker, movement of the major sectors over the last 5 days, and it's been a 5-day rally for the S&P 500. And what's encouraging is that technology is leading the charge in that rally. Technology is the largest sector in the S&P 500, so we want to see technology do well if we're bullish. Discretionary materials and industrials round out the top 4. Financials, healthcare, comms, and staples are middle of the road. Energy, real estate, and utilities are at the bottom of the list, but what's interesting is that all of the major sectors are higher over the last 5 days, so it really becomes what's going on with the relative performance. Now, we've seen a nice rebound in tech. We're talking about some participation from cyclicals. Look at the materials. Look at industrials as well. What we're seeing is some profit taking in defensive areas of the market, real estate and utilities. Too early to call a trend reversal. Those trends do remain bullish, so we'll keep an eye on those groups. Energy continues to just be a group that's bearish. When we look at the sector ETFs, energy remains the only one with a bearish Chaikin Power Gauge ETF rating. Now, within the financials, one of the groups where we've been very bullish has been insurance. Over the past 6 months, the insurance subsector has outperformed the S&P 500 by 7.5%. Power bar ratio, which measures future potential, is very strong. 31 bullish or very bullish stocks. Only 2 bearish or very bearish stocks, and it's ranked number 1 of the 21 subsectors we look at. Really been insurance, aerospace, and defense jockeying for those 1 and 2 slots at the level. Some of the indicative insurance names, all with very bullish Chaikin Power Gauge ratings: Hartford Financial Group, HIG, First American Financial, FAF, and MetLife, ticker symbol MET. These are the types of names. These are leading stocks in a leading industry group. You want to look for these opportunities in names like HIG, FAF, and MET when these stocks are close to oversold levels. Now, just taking a look at the industry itself, KIE is the SPDR S&P Insurance ETF, and we can see here, very bullish Chaikin Power Gauge ETF rating. There's that ratio, 31 to 2, bulls to bears. Conducting the same analysis, very bullish rating, outperforming the market. Now, we are closer to overbought than to oversold, and you're seeing that across a lot of the stocks within the industry group as well. So not necessarily the time to chase, but certainly time to be building a watch list of names. Ticked here at a 52-week high yesterday. Look at the intensity of Chaikin money flow, intensely bullish. Above the rising long-term trend line, odds are that insurance is going to continue to be a group that outperforms the market. So it's a group where we want to build a watch list of potential long ideas. And when the stocks in this group with very bullish and bullish ratings that are outperforming the market become oversold, they become interesting opportunities or ideas on the long side of the portfolio. Diving in now to yesterday's trending names, the S&P 500 gainers and losers. Department stores had a solid day after Hudson Bay was making some moves in and around their brands. Sent a lot of the department stores higher. Macy's went along for the ride, up 6%. ADI catches a double upgrade from sell to buy, sent that stock higher by 5.8%. LyondellBasell, tender offer, sent that stock higher by a little more than 5.5%. Kraft Heinz, this one's been ugly, but they did file their updated financial statements. That was enough to send the stock higher by 5.5%. They do report earnings this week. And Wynn, gaming names were positive yesterday. Wynn was up 5% on the day. Salesforce.com down 5.25% after announcing that they were buying Tableau, ticker symbol DATA, was met with some mixed analyst and media reviews. INCY down 5%, no real news there. Same with COG, down close to 5%, didn't see any real news. ADS is making some changes in their C-suite. CEO and CFO. That sent that stock lower by 4.5%. And then Molson Coors, TAP, TAP is the ticker symbol there, down nearly 4% as it was initiated with an underperform rating by one of the large investment banks yesterday. So what are we talking about today in the note? We're talking about the improvement in cyclical sectors. Remember last week we highlighted this chart. It was down here. And we said tech was at an inflection point, was holding above support, holding above the 200-day moving averages. We highlighted it in our note to Chaikin Analytics clients last Tuesday. Solid rebound you saw over the last 5 days, leading sector. What's interesting to me is the momentum of the ratio. Now, we had this nice steady uptrend. And notice that during the uptrend, momentum never really became oversold. Went into a bit of a consolidation with the market and then began to outperform once again as the market bottomed out in December. And then on this pullback, we never became oversold. That was our tell. Never became oversold, increasing the odds that support was going to hold. And a strong rally ensued. At the same time, on an absolute basis, remember we highlighted 70 as support, tagged it, and moved higher. Simple process, identifying trends in the marketplace and identifying when they are likely to persist or may potentially be ending. Tech is improvement in the cyclical area of the market that is encouraging to us. Another area that's showing some cyclical improvement, materials. What we're looking at here is an absolute chart of XLB, and you can see a sharp rebound. We've retaken the 200-day moving average. We've retaken the 50-day moving average, which is now beginning to move higher. Might run into a little bit of trouble here, resistance at the 58-59 zone. But what's interesting to me again is momentum. During this sell-off, momentum never became oversold. Had a very small positive divergence at this low before the rally that ensued. And if we look at XLB, the materials ETF, relative to SPY, you can see we have now taken out a one-year downtrend line and starting to outperform. Improvement in cyclicals is encouraging for the market. Still too early to call the trend in defensives over, but we are watching the rotation, and we're watching it closely. And we're looking for potential changes of trend, which would call for a shift in strategy. Right now, not seeing it, but some of these improvements in areas like materials and in areas like technology are very encouraging for bullish investors. Retail, on the other hand, remains a group that we want to avoid. Here's the XRT, the SPDR S&P Retail ETF. Before we get to the chart, let's look at the power bar ratio for retail. 29 bearish or very bearish stocks, 9, count them, 9 bullish or very bullish stocks. Chaikin money flow has been waning since the beginning of the year and is now negative. The relative trend is solidly in place to the downside. Retail continues to be an underperformer. Notice that when the market made a high in September, retail made a high August, September timeframe. But when the market made its high in November, retail never came close to threatening it. Remains below the declining 200-day moving average, remains below this resistance zone, or call it $43 to $44. And look at the candle yesterday. For you candle pattern folks, that is a shooting star after a rally to close near the lows of the day. Would not be surprised to see retail continue to be an underperforming area of the market. And we're calling out Burlington as our bearish stock of the day today in our note to Chaikin Analytics clients. Burlington has a very bearish Chaikin Power Gauge rating. It's a weak trend, weak industry group. So we know it's an area that we want to avoid, or a stock that we want to avoid. Stock is currently oversold with bearish money flow below the long-term trend line. Market and model are in agreement as we've been on this bearish rating, and the stock is underperforming the market. This is the type of name that you look at if you're looking for opportunities on the bearish side, or at the very least, names to avoid. Names that have the potential to do harm to your portfolio. Burlington, BURL, fits the bill. Closed at 164.42 yesterday. That's going to wrap it up. Head over to ChaikinAnalytics.com/survival-guide to sign up for my weekly survival guide that gives you everything you need to know for the week ahead. I will be back here tomorrow.